So we're going to be talking about turning inspections into profit and navigating financial standards with confidence. The first step to turning your inspections into profit is making your numbers work for you. So we're going to be going over each of these items that are listed on the screen here. We're going to track, build, learn, manage, and invest. So we're going to go over how to track your expenses and income using an accounting software. Doesn't matter what type of software, as long as you're tracking it. I prefer QuickBooks Online, but if you have a different software, that's okay too. We're going to build a budget and talk about what all would go into building a budget and then actually following it. We're going to talk about learning the basics of reviewing your financial statements. We're going to manage your cash flow, and we're going to talk about investing in growth. These are all things that are important for you to be able to learn how to make your numbers work for you. So the first thing, tracking your expenses. First, you want to organize all these expenses into three key departments. You have your marketing/growth department, you have your admin/operations department, and then you have your services department. So marketing/growth, marketing/growth, whenever you think about that, there are your traditional marketing expenses, but then you would also have things that go into it like your travel or like different types of conferences that may help you to develop your business better. So these are additional expenses that would go into that department. Admin operations, you want to think of as like your office type of expenses. And then services would be anything that's directly related to performing a home inspection. You would want to talk or put all of those types of expenses. So it would be like lab services, any kind of mileage that you pay for your inspectors, if you have meals for your inspectors. And then of course, your payroll expenses are the largest expense of your business. You need to be breaking those out by those departments so you can get a good representation of how much you're actually spending in those departments. Okay? Then the next step is 4 steps to building a brilliant budget. First step, identify your fixed versus variable expenses in your business. So that would mean, if you haven't done something like this, you would go through your bank statements, credit card statements, any kind of loans, all these things, and identify all the fixed costs that you have each month. Identify your variable expenses. Variable expenses usually depend on your revenue, and so then you would want to look at what a percentage of your revenue is based on what you normally spend from that. And look at it from the monthly basis because, as you know, your business may ebb and flow depending on the time of year. So you want to make sure that you're looking at this on a monthly basis. The next step is to project your revenue based on where you've been. What that means, don't look at it over the whole year, because if you're looking at the whole year, again, you have seasonality, you have ebbs and flows. So you want to look at it month by month basis. Look at your previous year's month compared to the current year month, and then project your revenue based on where you want to go. You would include factors like if you add new inspectors, that would obviously give you more capacity to make more money, and so you would increase your revenue accordingly. The next step is to plan for new expenses so that you could grow or expand. How you do this is you think about all the expenses that go into what it takes to grow. So if you want to grow your revenue by 20%, then you need to make sure that you have a plan in place to get you there. That would include if you need to hire a new inspector so that you can actually meet that growth, then you hire an inspector to do it. Then you need to make sure you consider things like if you have vehicles, tools, extra gas expenses, and any other type of expenses that go into adding a new inspector. The next step, and this is the final step, is to remember to include balance sheet items, such as, this would be things like loan payments, owner's distributions, and assets that you need to purchase. Those items don't typically land on your profit and loss statement, and so it would make a difference as far as your budget, because if you only include the items that are on your profit and loss, you may be missing a huge chunk of costs that your business incurs that you're not budgeting for. So it's very important to make sure that you include items that traditionally hit your balance sheet. The next thing to getting your inspections turning into profit is to learn how to read your financial statements. If you don't know this, get with a financial advisor, a consultant, somebody like myself, or your bookkeeper, whoever, and make sure that you are talking to them about your financial statements every month. If you don't understand how to read them, ask them, talk to them about it. If they don't know how to explain it, find somebody who does, because this is one of the most important steps that you can take. Putting your numbers in order is not going to do you a bit of good if you don't know how to read it. So the basic financial statements that you should be looking at every single month or more frequently would be your profit and loss statement, your balance sheet, and your statement of cash flows. Those are just the basic reports. Then for the home inspection industry specifically, some uncommon reports that are equally important to this industry are the budget versus actual. So you would have your budget built. You want to look at what you actually did, see where you're out of line, and fix it. Your expense summary by vendor. So this report is really, it's a good, solid report to have, because if you look at your vendor summary, how much you're spending, look at it month over month so that you know, okay, am I trending high in these months? Why is it higher in these months? Did I forget to pay a bill and so it doubled up this month? Or did they raise their costs and maybe I need to be shopping around for another vendor that is cheaper and can actually get the service for me at a better price? The next report would be industry benchmark summary. This report gives you the key percentages that other businesses that are similar size to you are operating under, and it's important for you to know how much you're spending in those departments so that you can actually know where you're landing and if it's healthy or not healthy for your business. The next one is an inspector capacity tracking report. This report is crucial, especially if you are trying to grow your business. If you want to grow, you make sure that you are tracking your capacity, because if you're not going to know if your business is really ready to be able to handle that growth or if you're going to fall flat on your face. A lot of you have been in the business for a little while, and you may have a good gut feeling like, hey, we're really busy. We could probably handle more business. This report takes that guesswork out and gives you the ability to have the confidence to know that you can actually say, hey, these are the numbers behind this. This is going to help me to know I can do this without having that anxiety that goes with it. The next one is the profit per ticket. This one's a fun one because it gives you the ability to know if you're actually being profitable for every job that you're doing. You can also calculate then what your break even is. So it'll give you what your average costs per inspection are, and then that gives you the number to know this is what I need my average ticket to be just so I can break even. The profit per ticket is then the next number after that you say, okay, this is how much I want to make on every inspection, so this is where my average ticket needs to be. It's a really important report to have. Then, the next piece, once your expenses are in order and you have a good plan going and you feel like, hey, I have a grasp on my financials, I understand these statements, the next thing is cash flow management. That's where that statement of cash flows report is really important. You can have all the profit in the world, but if you have lots of loans and owner's distributions that are causing your cash to go negative every month, you're not going to stay in business very long. If you lose your cash, that loses your ability to even be able to grow your business. So this is a really important report that you want to make sure that you're tracking. Let me ask you a question, and I do want to hear from you. Do you know what the difference is between cash flow and profit? Show of hands, anybody? All right, you know the difference. All right, who wants to tell me what the difference is? Robbie, you grab the Q&A ball. Who wants to say the difference? Hang on a minute. Robbie, toss that back there. This is my assistant. Oh, get back there. Get back there. Go get it for him.
I'm just going to say, all the cash flow in the world isn't going to make you a profit necessarily.
Cash flow is revenue.
Cash flow is revenue.
Coming in. Cash coming through the front door.
Okay. All right, anybody else have an answer? All right, so cash flow is what your positive income or negative income is in your bank. So revenue is what you get in coming in the door, right? Okay, so you got your revenue coming in. Then you have all your expenses that come out, and then you got your net income. Your net income, net profit, say that you make $35,000 on your net income, okay? Then you look at your bank balance at the end of the month, and it's not up $35,000. Where did the rest of that money go? Your cash flow, the difference with that is the net income less all of the balance sheet items that hit. So that would be loan payments, like your business loans, vehicle loans, credit card, changes in the balances there, any kind of liabilities that you have, like any kind of accounts payable or any kind of payroll liabilities that you might have outstanding. And then here's one of the biggest ones that I see, especially with guys starting out, is the owner's distribution. If you're not on payroll, that can be a number that can be really, really large when you're starting out, and it will deplete your cash to the point that you don't necessarily have positive cash flow. So cash flow is net income less all the balance sheet items, means whether you have positive or negative cash flow, okay? Knowing whether your business has positive or negative cash flow every month is the next step to managing your cash flow. So knowing what that means is incredibly important because you can't manage it if you don't actually know what it means. Tips to maintain positive cash flow in your business. First and foremost, if you do not have a process in place to get all of your checks and cash deposited into your bank every single week at a minimum, more frequently if you need more cash flow, you know, if your cash isn't like handy all the time. But at a minimum, you want to make sure that your cash and checks are deposited weekly. This is a problem that I see with the larger inspection firms that have multi-inspectors that are going out and accepting cash or checks at the jobs. So the inspector may go over there, you don't have an inspector meeting except maybe once every month, and so the cash gets held on to by the inspectors until they meet with you at the month, or at the end of the month, and so then you are not having that cash in your bank for an entire month. And so that lag time is way too long because, as you know, a lot of your expenses vary by the revenue that you get. You still have to pay all those expenses. You don't necessarily get to hold off just because your inspector hasn't given you the money. So making sure that you have a very good, solid process to get that money into your business as soon as possible is the best practice. So that's number one. Second one is build cash reserves for slower seasons. So especially the businesses that are in the northern states, you have a lot of seasonality in your business. So you might have like up here in the summer and then you come down in the winter, and it is really hard to make it through the winter for the northern states. If you're here in the south, you have a little bit more consistency in your revenue, but you do see the dip, especially in January. That's one of the slowest months of the year. Making sure that you have cash reserves rather than having to borrow or use a line of credit or any of those kinds of things is the better practice. So building cash reserves for the slower seasons. Who here can tell me how many months worth of expenses do you want to have on hand in your bank as a good solid practice?
6 months.
Hang on a minute, Robbie. Guy in the back there, toss it back there too, all the way in the back. Oh, almost. That was pretty good. That was better.
Still working on the throw.
How many months is it?
3 months?
3 months. So I say 3 months because typically in the home inspection industry, if you're going to have a downtime, it's about 3 months long. You might have like a down here for a month. Now, if you're in the north, it gets a little longer, but really, truly, 3 months is a good, solid amount of money that you want to have, and you use the lowest 3 months of your expenses. If you use the lowest 3 months of your expenses, then, thanks, Carrie. Then you can have that in your cash reserves. That's a good goal to have. So say that January, February, and we'll say December, because December is usually a slower month too. Just with Christmas and then right after Thanksgiving, it's usually just a slower month. So December, January, February, say those are your lowest 3 months. and you have about $55,000 in expenses on average every month for those 3 months, how much would you want to have in your bank account? $165,000, that's right. So you'd want to have $165,000 in your bank. And you say, man, I looked at my bank account, I only got $90,000. Well, build a plan to get your cash flow up there before the next slow season. That way, you're not having to dip into reserves if things go a little sideways that season. We all know, especially the last few years, things can really go sideways quickly. So being prepared is the best way for you to be able to make it through those storms. The next thing, build and follow a personal budget if the reason that your cash flow is going negative due to owner's draws. So if you're more of a one-man band that hasn't necessarily set up payroll for yourselves yet, and you're taking owner's distributions, you say, oh, I've got 65% net profit, I'm doing great. But then you find out, oh, my cash flow is barely hanging on. I don't have hardly any money in my bank because I'm taking it all in draws. That means you need to look at your personal budget and build a personal budget for yourself. Live within your means. We all know this, we've heard it a million times. But make sure that you are doing things to not jeopardize your business, because that is your main source of income. If you jeopardize your business, you jeopardize your personal well-being. So building a personal budget for yourself, follow the same steps that you would for your business, but do it for yourself personally, and make sure that you cut anything that you don't really need. That way you can start building those cash reserves up. The next thing, pay off debt during peak season. Do not do it right before you're going into winter, because you're just going to shoot yourself in the foot. If things go sideways, you're going to have to borrow and then pay interest, and it's painful. So do it at the beginning of the peak season. Wait till like March when things start coming back, and pay off what you can. That way you're not paying as much in interest. Make sure that you get as much paid off as possible. Obviously, you don't want to take it down below what your 3-month worth of expenses are. So if you have, we're going to use the $165,000 as our base, right? So you got $165,000 in your bank. Well, you have more than that. Say you've got $200,000 in your bank, and you've got some debt you want to pay down, and we'll say $100,000 for easy numbers, okay? $200,000 in the bank, $100,000 in debt, and your average expenses for 3 months are $165,000. That means that you've got $35,000 that you can work with to pay down some of that $100,000 in debt. Don't do more than that. Make sure that you don't deplete more than what those 3 months are, because the sky can fall at different points during the year. Did you have a question?
Yeah.
Okay.
Question about what I know you're throwing
Here.
out 55,000 as a general number.
Right.
Does that number in your example, does that include payroll as expenses? You talk about all?
It depends on the size of business, but yes, it would include all expenses. Yes, including payroll.
That's variable with income, so.
It honestly, 55,000 is just a random number, but we're going to say all expenses, including payroll, any kind of labs, everything for 3 months. Yes. Yeah. Good question. I like it. All right. So pay off debt during peak season. The last thing, you want to maintain at least 15% net profit. This is by industry standards. Generally speaking, you want to have at least 15% net profit, and that's normal for the home inspection industry. Anything above that is just gravy, but typically if you're getting closer to 20% net profit, what do you think that you should be doing if you're getting up closer to 20%?
Pay off debt.
I like you. What is your name? Mike, thank you. Yes, he said grow. Yes, if you're getting closer to 20%, you want to be investing in growth. And that is exactly where you should be, which means look at hiring an inspector, because you probably have the ability to bring one on if you're getting closer to 20% net profit. All right, so managing cash flow, that's that portion. The next thing, invest in growth. It goes kind of hand in hand. Thank you, Mike, for putting that up there. So I did not pay him, but okay, so invest in growth. First things first, assess your ROI. This is your return on investment. You want to make sure that everything that you are spending dollars on for growth is actually bringing in some kind of a return for your business. If it's not, chop it. Why would you spend the money? It's like giving money away. Why would you spend it if you're not actually getting any kind of return on it? The next thing after that is know your PPT. This is your profit per ticket. That is in one of those uncommon reports at the beginning. Knowing this number will help you be able to run your business more efficiently. And then lastly, only invest if it aligns with your business goals. So what this means is if somebody comes to you and presents an opportunity to you that sounds really great, but then you think about this and you're like, well, that's not really what my business goals are, don't invest in it just because it sounds really great. You got to actually sit back and think about these things. And you all know this, but this is kind of one of the steps to take in investing in growth. Okay, so that one was a quicker one. Anybody have any questions so far? Nope, okay. So now, this is the part that I love the most. I want you all to get together in groups of, we've got what, like 2, 4, 6, 8, 10, 12, 13 people. So let's do groups of 3 or 4, maybe 5 people in a group, but get together. I want you all to go through these questions. See the questions on the screen here? I want you all to go through these questions, ask them of each other, answer each other, and then we're going to have you share some of your experiences if you're comfortable. You all learn the most from each other because you all work in this industry day in and day out. You learn from each other best, so I want you to share your experiences with each other if you're comfortable to do that, and then share a little with me. Okay, so 3 of you up front here.
You want to do 4?
4 of you right there, and then you 3, and then if you 2 want to come on over, we'll group up here, or maybe the 3 of you back there, you guys can, yeah, that works. All right, so the first question is, what are the ways you are succeeding in responsible financial management in your business? So get together, talk about what are the ways that you are succeeding in responsible financial management in your business. All right, so that first question, does anybody have any examples that they'd like to share of how they're succeeding in their financial management, being responsible there? Robbie, you want to pass the cube to somebody? We'll go through the next question then, but who would like to share? Oh. That's Robbie, that's my kid. He's a good assistant. Oh, talk into the cube.
Hello.
Maybe?
Hello. Hello.
Oh,
Hey.
there it is.
Oh, hey. Is actually hiring outside sources to help us with some of our financial things like taxes, state taxes, if you're in the state,
Excellent.
and hiring people to help with our books. I think we think we can do on our own, and then find out when we're really busy that it can be overwhelming.
Yeah.
So having those people spending money, I think you said spending money to make money, is something we're not used to or we're not comfortable with, and when we actually do it, we learn from it.
Excellent. Yeah. hiring people to help you is a smart move. Anybody else have anything they want to share on what they're doing with financial responsibility?
Well, the first thing we did was we hired Katie to do our bookkeeping.
Thanks, Lance. Thanks, Lance.
Absolutely. It is my favorite meeting of the month. I'm not kidding you. It's the most empowering meeting I have all month. But also we kind of created a profit first model where every week we're putting money into a reserve account and into a profit account. And so that just becomes part of our, you know, basically just part of our line every month. Yeah.
That's a great plan. I like it. All right, this guy back here.
Being argumentative, so, but, because we get tied up in terms, right?
Yep.
So when you ask about cash flow, I'm not thinking net profit. You know, you go through revenue, cost of goods sold, expenses, gross
Yeah.
profit. Okay. When you say take profit first, when you say the word profit, what do you mean? So I don't get lost, because there's gross profit, and there's net profit. Okay, so what?
2% of every week. When I look at my ISM, I go, what was my weekly revenue?
Okay.
2% of that. I put it into the account.
Okay, so that comes before cost of goods sold. So what you're saying, that's what I wanted to define. So when because he said the same thing, profit first. So that means you're taking revenue, which I talked about originally, which I thought was cash flow, but a different term. And you're taking so if you want a 2% profit, you'll pull that, okay. Then you do your COGS and everything. Okay, interesting, all right.
Yeah, profit first basically says you take your profit first. You take that and you put it into a savings account separately so that you actually pay yourself first. That's
company-
the
the
whole,
company
there's a
first.
book, have you read it? It's Profit First. That's actually what it's called. I know, right?
Is there a healthy percent to do that? Like he says he takes 2%. Is there like you said, 15% is a good
So the
net
book
profit?
has, I believe it says 10%, if I remember right. It's been a while, but I think it's 10% that it says to take as a recommendation.
So you're tithing yourself is what you're doing.
Yeah, pretty much.
Oh, okay.
Exactly, yes. You
All
would
right.
want to start lower because you need to build it up as you go, because
But a healthy
10% is a
place to
huge.
possibly be would be 10% each time, let's say. Okay.
Yeah.
Okay, that makes a lot of sense. I just was getting lost in the word profit, you know. 'cause
Yeah.
That word can mean a lot of things.
Yeah. You should check out the book. It is a really good book.
Well, what's it called again?
Profit First, Michael Alex.
Oh.
All right, does anybody else have anything they'd like to share? We can move on to the next question then.
Yeah. What we just recently did, now we're a young company, so we started getting, we got a bookkeeper, accountant bookkeeper, and started getting P&Ls on a regular basis.
Good.
Profit and loss, I mean, looking at them. At first, it started out weekly.
Excellent.
And then now we get a monthly P&L and we look at that.
I love it.
Before we weren't doing that, and the P&L structure the way it was enabled us to better to manage financially, because you can really see, whoa, these products are costing us way too much money.
Yeah, exactly.
COGS are too high. Anyway, that's what we did.
Exactly. Yes. Yeah, that is the first step to managing your money better, is to actually look at your profit and loss and know
Yeah.
what is happening in your business. All right, anybody else have anything they want to share? All right, we're going to take another minute and let you go through what are the ways you need to improve your financial health. And then those who are brave enough can share. Take a minute and talk with each other.
I'll start.
Oh, if you want to move that, Robbie, go grab the
Thank you.
cue.
It's like taking your clip-on mic to the restroom if you're not worried.
Yeah, you don't want to be amplified. Ten seconds. Okay, anybody ready to share? What are the ways you need to improve your financial health? Man in the back. You know, we just need to leave the cube back there for you. Robbie needs lots of practice
Yeah,
anyway.
he used the same word, but the word was diversification. As the market flux and changes, I need a consistent revenue source. And in our area where I come from, we've had a real severe inventory problem in real estate. Just, you can buy, but you can't find it. Okay, so revenues start to drop from everybody. Okay, so by diversifying into other revenue areas that may not be as sensitive to certain market conditions, my revenue, the blood, continues to stay in the body, if you will.
It's a good call. Good call. I like it. All right. So anybody else want to share?
We didn't talk about this, but
Oh, get the cube.
I guess, first off, this is a great time of year to look at your expenses. It's just one of those you just kind of go, is this paying off? Is this, so just taking a little bit of an inventory on where you're spending your, either wasting money or spending money.
So do an expense boot camp.
Yeah, expense boot camp. What a great term. Yeah. Love it. Yeah.
We can schedule that. We can talk about that, Lance. Anybody else? Come on, somebody from this group. You guys got to share something. No? Okay, that's all right. You'll share? Yes. What's your name, sir? Garrett. Garrett. Oh, that's right, Garrett.
Yeah,
Hi, Garrett.
you're trying to win my business.
I-
So I think sometimes we take too much owner draw. And I say that instead of we could do better at looking forward to being like, oh, let's plan or have a plan. And we're like, oh, it's there, let's take it, right? And then later you're like, oh, not all of it, obviously, but oh, crap, right?
Yeah.
We bonus each other a little bit more than we probably should.
And that's where having a good, strong budget in place will help you. Because the budget,
You know anyone that could do that?
I might know a girl.
But you have Lance as a client. So
I might know a
can't. He's a
ninja.
competitor, so I can't compete against him.
Listen, I
Colleague,
work
he's a colleague.
with,
Nice call.
Garrett, I work with people in all markets, all over,
I'm kidding.
and I don't share anybody's stuff.
Yeah, I'm kidding. Oh, you can share
I don't even, I can share Lance's. That's good call. Okay, so Mike, if you would like to join a group, maybe you could join these guys here or pick a group to join. We're doing some Q&A here. So next question, we're gonna take a minute, just like the last time. If you have multiple areas you need to improve, what is the first priority for you to tackle? And go.
This looks good. Looks promising. Is that box a microphone?
Mike, there's also one right here.
Are you recording yourself?
Yeah.
Good.
Okay, 10 seconds. Okay, so if you have multiple areas you need to improve, what is the first priority for you to tackle? Who wants to go first? Oh, we got a brave man right here. What's your name, sir?
Jason.
Jason.
Jason, yep. So we were kind of figuring that, a lot of it's going to be your marketing. I mean, you gotta get the marketing.
Give that man a gold star.
Of course, Mike is up there, so.
Yeah, marketing, exactly, right.
Where are you out of, Jason?
Michigan.
Where?
Michigan.
Michigan. I love you even better. At least you're not like these two here from Dallas, So,
Yeah.
how many of you are from Dallas Fort Worth area? Oh, well, I need
love
to
it.
leave. Okay.
I love it. All right, who wants to share next?
Anybody?
Anybody?
Oh,
Anybody?
come on. One of you two guys got to have an answer.
They don't need any.
Or was his answer
improvement.
absolutely correct?
There you go.
All right, who's got the same answer?
I mean,
It is really good. It's really good. Okay. All right, so we're going to take another minute, and we're going to go to the next question. Or actually, this is a share. So share a success story for how you feel you are winning in your financial health journey. So share a success story of how you're winning at financial health.
Took 4 tries to get mine to work. They finally had to send a person up to open it.
Oh, boy.
Crazy.
This is going pretty good. Ten more seconds. Okay, and time. So who wants to share first at how they're winning? I love this guy right in the front.
This team is like on top of it.
I know, I love how they're all sharing.
Aren't you from Dallas?
We're small we're small.
Where are you from?
I'm in Santa Fe, New Mexico.
Oh, that's good.
Yeah, so one of the things that we've been successful at in Santa Fe is we're a small market, and we offer everything ourselves instead of sending out a third party to do like wells. We do wells, sewer, mold, any ancillary you can think of, we do it.
One-stop shop.
One-stop shop.
Love
and
it.
that has increased our profit margin almost 50% for each inspection that we upsell. And it's been great.
Yeah.
I mean, we did do where we hired people from other companies to do our sewer scopes, and then we found out that after purchasing the equipment and getting it on our own, it paid itself off in 6 months, the equipment did. And
Yeah.
we're pretty happy with that. So if you're able to do that, it really makes a difference in your
That's
income,
awesome.
so.
That is awesome, I love it. Great share. All right, who else wants to share how they're winning?
Donna does.
Oh, I do.
Oh,
I love it.
all right, tell me your name.
Donna Bailey.
Donna, I'm Katie. Nice to meet you.
Yes. Hi, Katie. Everyone say hi, Katie.
Hi,
No,
Katie.
but I think I was just saying expanding intelligently and not holding yourself back to wait until you're 100% ready, but doing that, 70%, 75%, we're ready to go. Let's not doubt ourselves too much. But the main part about that 70, 75% ready is financial. It's the money's in the right place. We're gonna get the ROI and that sort of thing.
Exactly.
We may not have anyone to do the service, but we can pay for it, you see.
Plus, having the numbers, it takes the guesswork out of it.
Yeah.
It gives you the ability to know and have the confidence that you can do it.
Yeah.
I love that. That is awesome.
Yeah, I love this.
I do too. The Q&A box is amazing.
Yeah,
It's a great technique.
I know. Yell at the
All right, who wants to share? Back here.
There you go, Michael, take a shot.
Oh, yep. Okay, let me see if I can get this.
Idea of the 75%. I've heard that before somewhere, 75% and then implement. I don't know who came up with that. But it's the same with the ancillary services, being able to offer those, even though I don't offer them, but by getting a 33% gross profit on somebody else doing it for me, hello, I mean, it's the same thing. And then eventually you can integrate if you want to get that camera and so forth, but you don't have to not offer that service. So I offer septic, I offer sewer scope, but I stick to that, what is my gross profit off of that service? And as long as I get a 33% gross off of what Bob does for me, I'm okay with that.
Yeah, I love it. Listen, I love the one-stop shops. I mean, it's so convenient, and if anything you can do to make it convenient for the realtors is going to help you, which, they like it convenient, so then they want to use you more than, the other guy down the road that's like, oh, we don't do that, and I can refer you to somebody to call. It's a lot better if you do it all one-stop shop. Great.
Throw a couple things in. Anybody else? Next? So the question is, share a success story for how you feel you are winning in your financial health journey. And I've been at this since 1985, so I'm working on, almost 40 years, 39. And there's been many successes along the way, right? One is making sure I had more money in the bank at the end of the month than I did, So that was like, woohoo, you know, when you're like a brand new inspector out there and everything. Being able to hire people to be able to do things, whether it's hiring them to do the marketing, which is the number one thing that most people make the mistake of hiring their first inspector, and they should be hiring their first marketing person. And when you hire your first marketing person, it just changes everything completely. And just recently, I say recently, in the last 5 years or so, we were actually able to buy our own building, and it just completely has changed the landscape of our business, and part of that definitely felt like winning in our financial journey.
Yeah, that's a huge win.
Yeah, and we pay that off in 2030, so after that, all I have to do is pay taxes and insurance, which, by the way, is a hell of a lot, but pay taxes and
Especially
insurance.
here in Texas.
And I don't have to worry about rent, and I don't have to worry about people coming to my house, and I don't have to worry about vehicles parked in the street and all kinds of other things. And so there's lots of little steps. If you'll talk with Katie, one of the things I think she can do is share with you some of those small steps, whether you're a single-man operation or a multi-million-dollar operation, of what financial success would look like in that area. So, and again, I know some of you were here earlier, so I apologize, and I didn't have a microphone then. So 2022 was a bad year for us. We lost money in 2022, partially because I don't like letting people go. I hold on to people sometimes longer than I should. People mean more to me than money. Unfortunately, that meant I lost money in 2022. So one of the things that happened was I started looking and talking with my top two people, which are Jonathan and Krista, son and daughter. Krista's my eldest, and started trying to figure out what we were going to do to fix that problem. And then 2023, we started fixing things, putting things in place. Krista had been working for another company that I had sold, and then she came back, and by the end of the year, we were having our best year ever in 2023. Best year ever. Not better in 2022, best year ever. And part of that is because we sat around the table and I said, who do we know that can help us get the numbers right? And Katie's name came up because of past relationships. You've been in this industry how long now?
Since 2018.
2018. And she had worked on our books previous, but then we had gotten away from it, and our books got out of whack. And so in 2023, we reached out to her. In 2024, we hired her again to help us start putting things back in place. In 2024, we're having our best year ever again. Best year ever again, better than last year. And we're more profitable this year than we've ever been before. And that really came because of the work that you and Krista did and Jonathan did on the numbers and everything. Winning is knowing when you get to the end of the year and your bookkeeper tells you, oh crap, you're gonna have to pay taxes, okay? And of course, I pay as little as possible, but still, it's so much better to have to pay taxes than go, I don't have any money in the bank. 2022, I had to go borrow $150,000 to stay alive. 2023, I had to borrow $100,000 to stay alive. Even I had my best year ever. 2024, my tax accountant's going, we need to set more money aside for taxes. So, and I want to tell you personally, publicly, thank you for helping me fix that.
Thank you, Mike. I appreciate that. It's going to make me cry. Thanks, Mike.
Well,
Okay, so
you deserve it.
one of the things that he said, and this is not in my slide, but taxes, a lot of business owners, when they first get into it, look at it like the worst thing in the world to have to pay taxes.
No.
When you first start out, it's okay to try to write off as much as you can, obviously legally, work with your CPA, make sure that you're doing it the right way. It's okay to do that initially because, you know, I get it. You don't want to have to spend as much money or you want to save as much money as you can. However, quickly you will get to a point that that is a terrible strategy because you will only shoot yourself in the foot if your goal is to zero out your net income every year. You won't have any money for growth, and then you won't be able to stay in business, and you won't have good, positive cash flow.
Well, and it's worse than that,
It's
too,
more
because...
worse than, oh, I'm sorry.
I apologize. Go ahead, Mike.
Go ahead.
Worse than that, because of the hobby loss rule, let's not go there, okay? 5, you have to make money out of so many years out of 5. I've seen small businesses that, I don't pay taxes because I write off all this stuff. Well, that's first of all. But second of all, your worth of your business isn't there to financial institutions. Are you making money? Yes.
Yeah.
And paying taxes means you're making money.
Yes,
Yeah,
exactly.
and the other worst thing that we ran into was when we were trying to buy the building, and then when I'm actually crazy, just so you know. I bought the house next door to me, and then I bought the house next door to that, and I bought the house behind me. And all three of my 4 kids live within, easy distance of me. But when your business doesn't make money on paper, mortgage companies don't like you very much.
True
Nobody
story.
likes you.
And they want to charge you more interest, okay?
Yeah.
So it's good to allow your company to show some profit and to show some, taxes being paid and different things as well.
Well, and the best thing you can do for that, set money aside for taxes. Work with your CPA, get your estimated taxes, and make sure that you set it aside and pay it. It is the best thing you can do for yourself. You got to get out of the mentality of zeroing it out so you don't have to pay taxes, because that is not a healthy mentality to have. So, last question, we're going to take a minute. Last question on here, and it's a share again, is share a financial experience that was a struggle for you and what you did to overcome it.
I think I shared mine already.
You did. Thanks, Mike. That's all right. We're going to let these guys talk. We'll give you a minute. Here, you want to pass the Q&A block back
Yeah,
up?
because I don't want the competitors to hear us talking over here.
Toss it to Robbie over here. Oh,
Mike's got an arm on it.
it's a good thing that thing's protected. Carrie's never going to give me the Q&A block again. I'm giving a little more than a minute.
You good?
Thanks, Mike.
Sorry, I wasn't here the whole time.
You're okay. I feel good.
Good timing. Good job, Robbie.
All right, 10 seconds. Okay, who wants to share first? Well, hang on, you gotta wait for the cube. We gotta be able to hear you.
Man, I'm 71 years old. I can throw that
What
in
a
there.
catch.
What we did, what Mike just did, but in a smaller way, we actually built an office this year. Okay?
Love it.
And it was the same thing when you rent your apartment or your home, what do they charge? $2,000 a month to rent, but I can buy that same house for $1,100 a month.
Right.
So we fixed that expense, and from that, the services we now can offer out of that office, out of that classroom, out of those other things, it's fixed, it's mortgage. And
That's
it.
phenomenal.
So we found that to be a very good move on our part.
Love it. Anybody else? Who else wants to share something that was a struggle that you
Sir.
overcame?
Oh, I love hearing Lance struggled.
So, kind of like Mike, in 2023, we had about a $150,000 setback. That was an employee that
Oh, yeah.
we had to fire, and then tried to replace her with somebody key answering our phones, and tried to hire too quickly. Did a 90-day review, realized that she'd missed over 500 phone calls, and I had to borrow $150,000 from my wife. From savings, which was humbling in all sorts of levels, but we built it also into our bottom line, and have been paying her back at 10% every month, so that she knows that her money was not just spent in vain. But that was a tough, where I didn't take a paycheck for about 4 months.
Yeah.
Yeah.
So
Been there,
that was
done
brutal.
that.
That was brutal.
So how did you overcome it then?
First, reduced expenses, in a big way, and then just again kind of built the recovery into the bottom line. We actually, then instead of trying to solve our internal call center problems, we hired ACC. They helped us out. We helped them create a product, a service that got us through that time.
Yeah.
And so, yeah, I feel very grateful for a lot of the folks in the building here today, kind of help us recover from that.
That's awesome. Anybody else? Who
Can I
wants to
share a secret? You guys okay if I give you a bonus? Krista shared this with somebody the other day, and Krista's my oldest. She oversees everything. Jonathan oversees our inspection business and helps her in some of the other companies that we have. We were renting at the time, and the lady came in and went, your rent is due. And she went, we don't owe rent this month. And the lady went, yeah, right. She went, no, go read our our lease. So what month is the busiest month for home inspectors? July. All right, great. July, June, July. What month is the slowest month for inspectors? January, December, okay. So in June, July, we'll do 10%, 9% of our business, depending on which month. Sometimes it swaps. And then December and January, we do 5% of our businesses. So I started, when I talking about this question, one of the things I started doing was restructuring our leases and debts and different things. So a lot of my loans that I currently have, we pay throughout the year, and then when it comes to November, December, January, and February, we either don't pay them, they're not due, or we cut them way down. And I will tell you that most of us think we have to pay the same amount every single month. So when that lady walked in and then she went back and she looked at the lease, I did not have rent due in December or January. And the rest of the year we paid more, but those 2 months, I didn't even have to worry about cutting a check for that. So there's these little things the world tries to tell you, you have to do it this way. But I will tell you, if you get a little creative, you can stay ahead of the curve and protect yourself, protect your company, and different things.
You negotiated that lease that way, correct?
We rewrote the lease so that we would pay basically in 10 months instead of paying in, and you know, no big deal. But you know what? It sure was nice for our budget, and we're doing the same thing right now. We literally cut out over $10,000 a month of payments during November, December, January, February, at least those 4 months, maybe 6 months, that we don't have to pay, and then we pick up the payments. Now, in some cases, I don't try to pay it in 10 months or 6 months. I just extend the loan or whatever it is. So remember I told you I had to borrow $150,000, $100,000? And so what we did was we set those up so we would pay them, and a 3-year loan turns into a 4-year loan, but it becomes so that I don't have to pay, but interest only in those months where we're starving and different things. I'm managing my cash flow based off of the bell curve of the way the business goes and everything. I will tell you, that's one you can take home and put in the bank. It'll take you a year or two to start setting your systems up that way, but I tell you what, sure is cool in December when you don't have to write $10,000 worth of checks out, you know, in that regard. So that was one. Oh, by the way, we had a bookkeeper in-house. Before we hired you, we had a bookkeeper in-house. She stole $30,000 from me last year, okay? Or was that this year? I forget. We did put her in jail, okay? I don't know how long she stayed there, and I quit tracking it because it's not healthy to track people that do bad things to you. At least I don't believe that, and I'd like to, I like to just try to stop that sort of stuff because I don't need it in me. But she stole $30,000 from us because she just worked the books and bought things on Amazon and, you know, and then resold them and wrote checks and cashed them at banks. And we even had her on video, and she went, "That's not me. That's not me." But, I mean, it was pretty obvious, and so they put her in jail, which was nice. But had we run a background check on her, we would have discovered she'd done it to 2 other companies before us. So those are a couple little secrets, hopefully that'll help you avoid some of that. Because I will tell you, I'm not immune to $30,000 hurting, okay? And I'm betting it would probably hurt some of you guys as well.
Yeah, yeah. Thank you, Mike.
You bet.
Thanks for coming up and
All right.
sharing your insights. I
You tell 'em
appreciate
about
it.
your free report.
I have not. So here's the last thing that we're going to do here is for those of you in this room, if you would like a free report from me, I can share a free report with you about some of those key percentages that are important for your industry so that you can know those.
Yeah, so one of the most asked questions I get is, how much should I spend on marketing? How much should I pay my inspectors? How much should I, pay my call center? How much should I pay myself? She's answered that question for literally hundreds of home inspection companies. One of the things is that I coach all types of industries out there. And I am going to be pulling this young lady under my wing because her and Krista are friends now, and helping her pull her business together and up to $1 million business. And I just want to make sure that you guys can get the benefit of the knowledge, because my whole goal in life right now is to help 100 people that will help 100 people. And she's going to be one of those. If you haven't, then pull out a piece of paper, write your name, your company name, your email, your phone number on it, ask her for that free report, and she'll get it to you. You might even say, hey, I've been inspecting since so long, and I did this much last year, I think I'll do this much this year, so she can see, that she can start pulling some of the numbers together in her head. And then this young lady right now, and by the way, this probably, once I get a hold of her, it'll be one of the last times she ever does it, but she's doing free consultations right now. So you can call her and talk with her and set up a free consultation, because I told her she should be charging at least $297 for a half hour of her expertise and time to be able to take care of people. Now, I get it, because I do the same thing. I sit down with people and just go through information and try to help them out. Right, Rick? Okay? But the bottom line is that, guys, Katie is the real deal, and I searched for 20 years before I found someone that really understood our industry and understood the numbers the way we do. And so if you're not going to take advantage of this, well, it'll end up costing you a lot more than what she does.
Thanks, Mike.
You bet.
Thank you so much. I appreciate it. So yeah, up on the screen there, you'll see the QR code. Go ahead and it takes you directly to my calendar. You can pick a day and time that works for you if you'd like to schedule a free consultation with me. Then we can talk about your numbers. We can dive in a little more to specifics with your company, the size and everything, so that I can give you a little more feedback that way. If you're looking for not necessarily monthly services, but you just want some consultative work, then I also do that for clients as well. So I will meet you where you're at in your business and work with you on your budgets and everything too. So does anybody have any questions? We've got a couple, 1 minute left here. Anybody have any questions they want to follow up with?
So, Katie, how would you...
Grab the mic there.
How would you counsel or advise somebody that's, say, maybe the first year of their home inspection business that is not really treating it like a business yet? They're just taking draws. They haven't really planned for their success, versus you've got these great systems for multi-inspector firms that are kind of on track with, when we're talking about hundreds of thousands of dollars worth of reserves, but there's maybe people in this room that are like, man, like $100,000 worth of reserves, that's blows my mind.
That seems crazy, right?
Yeah, so, but how do you help somebody like that just getting started?
So first things is I go to the basics, just like what we talked about here today. I would help to get the expenses in order and put those in a place so that they make sense, so that you can start understanding how your business is running and what those numbers mean for you, so that you can actually begin to grow your business and get it into a healthy place and start developing that mindset. But yeah, I mean, I basically meet all of my clients where they're at and at the size they are at, so that I can help them achieve the goals that they personally have for their business. Because you won't.
Person actually try to set up a budget.
Say this again?
Can you help a new person actually try to set up a budget?
Absolutely. I can set up budgets for anybody with a new person. I have a template that I use. I use it with I have an industry chart of accounts I use. Everything feeds together. I have a very streamlined process that saves me time, which ultimately saves all of my clients money. I do this on purpose because I know that my audience, generally, you're all small businesses. Even the multi-inspector firms, by general business rules, are still small businesses. And so I try to make everything as efficient as possible in my processes so that you don't have to pay more for me to figure it out. Okay? Any other questions? Well, thank you all so much for coming. Thanks for joining me. I appreciate it. I look forward to talking to you and